A KWEB catastrophe. The Chinese internet ETF down 11% today, falling to a new all-time low. Some of these names getting slaughtered this year. Pinduoduo falling whopping 84%. Alibaba, Tencent, and others also down significantly. Let's bring in David Riedel, founder and president of Riedel Research Group. David, great to have you back with us. One can be bullish, the long-term China story, but here's the question right now. Are these stocks investable? I mean, between pandemic shutdowns either before or now, Beijing's own crackdowns, possible delisting from the United States, there's just so many problems and issues facing this group.
That's right. And the problem is not so much the underlying fundamentals, though you do highlight some real problems that they have. Higher oil prices are very bad for China. The worst COVID outbreak since 2020, very bad for China. Continued focus on the zero COVID policy, Foxconn shutting down today. Those are big deals. But the reality is these U.S.-listed companies, especially the ones that are variable interest entities, which are sleight of hand to circumvent Chinese law prohibiting foreigners from investing in internet companies, are not sustainable structures. They're just not. So, no, people should not be investing in these VIE companies. They should be finding equivalent companies or other ways to get exposure to China if they want it. But they have to be careful right now because it's got some serious headwinds.
David, I can't quite figure out what's going on. China, Russia, they had that pact they signed pre-Olympics. I think it was a 5,400-word document that they put out. What are the chances that in this war they align themselves somehow with Russia? And what does that mean for their stocks or stocks in general?
Yeah, I don't think you're going to see a lot of direct alignment of China with Russia. Europe and the U.S. are much more important to China than they are to Russia as markets and as partners and all kinds of things. So I think you're going to see them trying to sort of thread the needle on their rhetoric, but I don't think you see an outright alignment with them. I think you need to understand that China has some good opportunities, has a good growing consumer class, has an evolving economy, but you've got to invest in it in Hong Kong or in Shanghai, on names that are not these variable interest entity names, because that's not sustainable.
But even so, David, I mean, and these are major concerns, but putting, Russia, Ukraine aside, putting delisting aside, and let's say you're not looking at those VIEs, are even Chinese domestic names at this point worth investing in, given the economic backdrop for China?
Well, the economic backdrop for China is certainly challenging, especially with the resurgence of COVID there. But it's not heading towards any sort of failure. Their balance sheets are much stronger than they were 5 years ago. They've really cleaned up the shadow banking situation pretty aggressively recently. They've invested a lot in their social contract with Social Security, pensions, healthcare, education, that kind of thing. So they're doing some things really right, and you just got to find places to play that. But people really bet on the tutoring companies, and then they outlawed that. So you really do need to be careful and talk to trusted partners who can have an insight into what's going on the ground, because it's tricky.
You gave us a list of 3 companies to absolutely avoid: PDD, Pinduoduo, 51 Jobs, which is ticker Jobs, and then Tyson, which seemed out of left field. Can you explain Tyson?
Yeah, we have a lot of experience with bird flu and the impact of a very contagious bird flu like we see in the U.S. right now, and that could really hurt Tyson. I mean, we've got the most virulent case of bird flu in commercial flocks in the U.S., in Iowa, in these big egg-laying states, and you've got millions of birds at risk of being culled in order to stop this bird flu. You could see tens of millions of birds taken out of the farms as a result of this, and that's a lot of downside for Tyson.
All right, David, great to have you with us. Thank you. David Riedel Research. We're focusing on tech, but I did want to go there because obviously we're facing all sorts of other inflationary pressures here, especially in the food chain. Pete, what do you make of China tech?
Mel, I've stayed away from it for a really long time, and I've only been trading with the options. I've not traded stocks for a long time. As you remember, I was Luckin Coffee for a long time. And after that experience, I said, you know what, never again. They're never going to catch me back in there again. I will say this. One of the things that we are seeing trading right now is what appears to be, to me at least, individual stocks they are selling. The sellers are everywhere, right? And we know that by the reaction we're seeing in some of those names. And I think they're hedging right now against some of these big, huge ETFs, as you mentioned, like KWEB, like FXI. We're seeing a lot of call buying in there, and that is not bullish. What I think is happening right now is the selling of a lot of the individual names and hedging that by buying some of these big, large ETFs to hedge to the upside if they're wrong. So it's really interesting to watch how this is playing out right now, but I'm only in those options, Mel, because I don't know how you can say, you know what, I feel really confident about buying these stocks right now. I don't know how you can do it.
Pete, I got a question for you. Are you seeing the short interest? I can't tell from the data. Is it really, really high? And that's why you're seeing that call buying?
Well, that could be, that makes a lot of sense. I really haven't been checking that, Karen, but I would say this. The volumes are absolutely outrageous. And when I say outrageous, today was a great example of that. When I was looking at a couple of the various different ETFs, for instance, I'm looking at just monster days in the last couple of days versus what's been the average, you know, the 3-month average and so forth. So the volumes are there to say that there is some real players in there. It's not just mom and pops. These are monstrous trades that we are seeing that are going on right now.